Please read this disclaimer carefully before proceeding further. Welcome traders to this week's edition of DXY analysis. My name is Vic. Thanks for joining me in this analysis. So what has been happening? Now DXY is obviously in downtrend at the moment. The market has been actually going down for this month as well. But as I mentioned before, it's not over until it is over. So because we still have few days left, actually quite a few days actually left in December. So anything can happen, and especially I'll show you a few pointers here which can actually change the direction of DXY. Now it may or may not happen, so do not take this as a signal, but you should always be aware of all the points, like bullish and bearish points when you're analyzing a market. So my purpose here is actually to show you all that points, make you aware of those points so that you can make an informed decision. So if you have been shorting DXY, or if you have been taking long trades on other currency pairs based on the direction of DXY, then it has been very good for you. It has been very profitable weeks for you, which is very good. But what you should be aware of that, at any moment in time, this can actually change the direction because of few factors. One of the reasons is this current candle right now in the month of December, this is looking extra strong. This is very strong candle. And if this actually month closes like this, then there can be a huge movement down as well to the lowest point here around 88 level, or so 88.25 level, around that level, or it can even fall down to 86, near about 86, 87 level. Okay, so that is quite a possibility if it stays like this. However, pay attention to the previous month's candle. This candle never actually closed below this, right? So this is not actually a continuation candle. However, this one is. So this candle is actually bearish continuation candle. This one is not, which basically means that if for whatever reason, if the dollar actually finds enough strength to go back up and close inside either this level, which is near about 91.5 if I'm not mistaken, so near about that level, if it actually closes inside, or it turns into a little doji or that kind of candle, then next month onwards the dollar index can actually start to move upwards. So beware that this candle can actually turn into a doji, or not exactly doji, but a rejection sort of candle from the bottom. That you should be aware of. It may or may not happen, so you'll have to wait for the candle to close, during the last days of this month. However, if this actually closes like this, then there can be a little bit downward move. There can be strong downward move, or there can be a divergence based setups. RSI or any other oscillator is not a good indicator, but if you look at RSI right now, oops, sorry, I'm looking at the wrong thing. Okay, let's try this again. So RSI, right? So if you bring in RSI right now, there is not much of divergence here. If you see, this is simply continuation. But if you go to the weekly time frame, you see there is a divergence setting up right there, okay, between this point and this point. So that can actually push the price up right in the next week, or maybe week after, because we still have how many weeks, one and a half weeks or so in this month. So beware of that. Market can actually do that, what I just mentioned on monthly time frame. But this is not a great measure of checking anything. So what you'll have to be careful with this is that if I come to the monthly time frame, that if this actually closes around here, then you can have even further bearish downward movement. So you'll have to watch next week and this month and this year close very carefully, especially this year close, because this month close is going to be very important for a dollar and for all the asset classes. At the start of the new year, new quarter, new month and new week, there can be a lot of volatility. So if you are in doubt, the best is to stay out or get out, right? So if you do not have to trade all the time, if you are in doubt, just stay out. So these are the possibilities. So just to revise what I just mentioned, if the market actually closes above, like where it is right now, if it actually closes inside, like 191.49, 91.5, for like around that level, then it has a good possibility of starting moving upwards. Okay, and the reason behind that is because the previous candle never closed below, so that means we never had lower low, and this is the only one, but this candle has not closed yet. So that's the main possibility. On the bearish side of the possibility, if this candle closes like this, then there is a strong possibility that there can be another bearish candle here. Okay, but we never know, because this is going to be new year and new month as well, so we do not know how it is going to act, how the market is going to open. But my bias on dollar is still bullish. The simple reason is that because of technical analysis. Right now we have, let me go to the weekly time frame and show you what I mean. There are several factors which are still indicating towards the bullishness. One, I showed you RSI, which is not a very good indicator, but still, there is one factor in there. But there are two M patterns which are forming right there. Actually, let me show you on this chart, because that's going to be much cleaner here. So if I go to the weekly time frame, one M pattern is, oops, let me just quickly remove this. One M pattern is right here, okay, which completed near about here. Okay, and that's why we saw this little bit of push upwards. And then we have another M pattern, which is which is something like this, and that completes somewhere around here. Okay, and there is another M pattern which is forming something like this. Okay, and that is also going to complete around there, but an extended version of that also goes beyond somewhere around here as well, right? So you have to be careful. But because these M patterns are completing somewhere we are standing right now, that is why we need to be very, very careful with this. Okay, we need to be able to see what the market is trying to do. So watch this price action very carefully. So if I just remove this entire thing, click on this daily time frame, this price action is actually not a good price action. This is showing a bad behavior. This is what I call as bad behavior. Even this one and this one, both of these are bad behavior price actions. Okay, which basically means that we can expect market to, if markets finds enough bullish momentum, then there will be a sudden and quick correction like this, which is going to eliminate all of this price action. So you'll have to be careful with that. So what do we expect next week? Next week we are still going to be monitoring our zone, right? So we had this analysis present there, which is this. So we had this FCP zone which was broken and turned into sort of so as to say, it's resistance, because the market went up and started to go back down. There are several gaps which I have left, and the gaps may or may not fill, but looking at the looking at the history of DXY, we know that it has been filling gaps, so there is a strong possibility that it can do that again. So there is one gap left at the bottom, so you can expect DXY to fall down, close that gap, and go back up. That's a strong possibility. We are still in FCP zone around 8989, which I mentioned in our group. So we still are looking for bullish bias, and as I said, there are several factors for bullishness as well. But because this is month end, weekend, and year end, you'll have to be very, very careful. If you're in doubt, just stay out and get out. Okay, so that's analysis on DXY. Hope you enjoyed this. If you did, if you found this educational or informational, make sure that you hit the like button, share it with other traders and trading communities, and put in a comment at the bottom of this video telling me what is your opinion on this analysis, what is your feedback, and what is your own plan on DXY. Thank you. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see core strategy training program. On this page, you will be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence training program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com and under training section, you'll be able to see and submit this form.